Good evening, everyone, and welcome to our Coast to Coast Legal Aid Virtual Clinic series. I'm Alicia Herwood, the Chief Operations Officer at Coast to Coast, and tonight's legal clinic is timely because it's on COVID-19 mortgages and what the banks are not telling you. We have mortgage and real estate professionals with us, as well as experienced consumer law attorneys to bring you that information. Just a reminder for anyone watching that this is only legal information. The questions can be asked in the Facebook chat, but we're not going to give specific legal advice because that would violate attorney-client privilege. And all the information is current as of today, which is September the 3rd. I'm going to turn it over now to Katiana Mazar, who's the director of the Coast to Coast Legal Aid Senior Law Unit, and she is going to introduce our guests. So Katiana?
Thank you, Alicia, for such a great introduction. Thank you, everyone, for joining us. Today, we are happy to have with us special guest, Gino Morrow. Gino is our home financing and reverse mortgage specialist with Southland Mortgage Inc. He is the former president of Florida Association of Mortgage Professionals. So we're happy to have him here with us. And also we have Realtor Benson Paul with Caldwell Banker joining us today. And we're happy to have both of them with us to give us their expertise on such a hot topic. But first, we're going to start off with Gino, and we're going to see Benson later in the hour. Thank you.
Thank you, Katiana. I'm going to start out. I am licensed, so I'm going to start out with the legal jargon I do need to get rid of. I am a licensed loan originator. My NMLS ID is 124072, and my company, Southland Mortgage, our license number is 1622177. We are a licensed Florida mortgage broker company, licensed with the Office of Financial Regulation. And I do currently still sit on the executive board of directors for the Florida Association of Mortgage Professionals. And I'm also a counselor for the Broward Housing Council. That being said, the opinions I'm going to give you today are my own, and they do not represent the opinions of either the Florida Association of Mortgage Professionals or the Broward Housing Council. And thank you for having me. I'm very happy to be here.
Thank you, Gino. We're happy to have you here. My name's Sarah Barker. I'm the supervising attorney for the Senior Citizen Law Project at Coast to Coast Legal Aid. And Gino, I think one of the questions we get multiple times a day is borrowers contacting us and saying, COVID-19 has caused a financial hardship in my life and I have a mortgage. I'm behind, or I feel like I'm going to fall behind. What's the first thing someone should do when they're in that situation?
So first and foremost, if there is an ability to continue making your mortgage payments, that is almost always going to be your best option. And I would encourage you to do that. Now, we do have what's called the CARES Act that was introduced at the beginning when this was announced as a national emergency for COVID-19. And there are some options that do allow you to contact your servicer and request forbearance, which would basically gave you the ability to not make payments during the period where you're experiencing a hardship. So, and that's a tool that you can definitely take advantage of.
Okay, now you use the word forbearance. We get a lot of questions about forbearance. So with a forbearance, like you were saying, it's a delay of payments, but it's not a forgiveness of payments, correct?
Correct, and that's really important to understand. So it is not exactly that. You're not skipping a payment and never having to pay it back. You are, in most cases, the way this is playing out is in most cases, the payments you do skip will be added to the end of the loan, and you should contact your servicing company to determine what your options are for that. But the forbearance gives you a period of time to breathe, catch up, and if you're furloughed or you have experienced a job loss or income reduction and you're unable to make that mortgage payment, it gives you a tool to actually use to help you out temporarily.
For borrowers who may have equity in their homes but do have a mortgage, have you been seeing people trying to refinance? Is there any advantage to looking to refinance during this time?
Absolutely. The interest rates are at all-time record lows. I would venture to say that almost anyone who does have a mortgage right now would benefit from refinancing their home. With one word of caution, the interest rate is not always the determining factor for what's best. You should really be looking at what it does cost you to refinance versus what your savings are in the long run. And there was just an article published in the Sun Centennial uh, where they interviewed me about that specifically. And you can certainly look at that and research that. I have a lot of information in there about that topic.
And would someone who's suffering maybe a financial hardship during this time, would they have the opportunity to look at refinancing, or is
Absolutely.
that not an option for
So
them?
just because you're in a forbearance right now, does not exclude you from being able to refinance your home loan. So you do have to start making payments again. So if you did choose to go into a forbearance and that began, you do have to, in most cases, make 3 full payments before you're eligible to refinance. But this is a huge benefit because part of this program is that the lenders cannot report you as being late. They will report that you are in a forbearance program, and that will be reported on your credit report. And in normal circumstances, you would have to wait at least a year after you've began making your mortgage payments again to be eligible for a refinance transaction. This allows you to just begin making your payments, and in most cases, after 3 months, take advantage of the lowest rates we've seen in the industry in a very long time.
Okay, and for the refinance purposes, would they have to show that they were specifically affected due to COVID-19, or could it just be any financial hardship?
They do have to show that there was a hardship, but it's quite frankly, it's very lenient at this point. So as long as those payments are, because the one thing to understand is that what really affects you when you're trying to refinance your home loan is, have you been late? Have you paid your mortgage late 30 days or more? So someone who was late prior to COVID and prior to going into a forbearance likely would not be eligible for a refinance transaction. Whereas someone who was always current and experienced the hardship and did go into forbearance and then started making mortgage payments again would be eligible for that. The other thing to consider too is we do look to see if you've not paid anything else. So if the mortgage is the only item that you are in forbearance on and you're still making payments on everything else, you have a much higher likelihood of being refinanced than if you stop paying for everything. That's not a great situation to be in.
Okay, could you talk a little bit about reverse mortgages? Because we get a lot of clients who contact us who are interested in seeing whether or not a reverse mortgage is something they could qualify for.
Absolutely. So if you are 62 or older, a reverse mortgage is actually a great tool to use for our seniors. There's a lot of misconception about the product that's developed over the years, and I would encourage you to get information about it and educate yourself a little bit more, because it actually is a very, very safe product. It's regulated by HUD. It's been used very, very currently. It's a very popular program. It's not what it used to be. And there's a tremendous amount of advantages where you continue to own your home, but you don't have to make mortgage payments as you would on a traditional home loan. So that has a lot of advantages there, especially for our seniors that might be experiencing low income due to low Social Security payments and so on. I've worked with a number of clients that have that, and it's sad to say, but they're receiving Social Security income below $400 or $500 monthly, which is almost impossible to survive on. So a reverse mortgage is a tremendous tool for those kinds of people.
Gino, can I add something? We hear a lot from clients who say, I'm not sure if I should get a reverse mortgage because I've heard that the bank owns my house once I get a reverse mortgage. Is that correct?
It is not. If you're using a FHA reverse mortgage, which most are, there are some other formats and programs that are available, but using the traditional reverse mortgage, which is the FHA product, you always own your home. It never belongs to someone else. You are not required to make mortgage payments. However, you do need to be able to pay for your property taxes, homeowners insurance, And if you belong to an association, you'd have to be able to make that association payment as well. And the advantage of a reverse mortgage is instead of looking at your credit score and looking at your income, they actually look at a financial assessment. We want to make sure that you do have enough revenue coming in to pay for your housing obligations, the tax, insurance, and homeowners association, along with any obligations that you have. And we want to see that you have some residual income after that. So it really is a very healthy way to look at affordability for that product. And it's a very safe product to use with those guidelines set in place for our consumers.
Okay, my mom is going to be turning 62 in 2 years, so I will be contacting you about that.
Absolutely. Absolutely. There is one more item that borrowers can use if they've experienced some income problems during this COVID situation, and that is if you do have an FHA loan currently, there is a product called an FHA Streamline loan in which we do not look at credit and we do not look at income. What we basically do is, since you currently have an FHA mortgage loan, if the rates are better for you and we're able to reduce your interest rate and reduce your payment, we don't have to re-qualify you again for that home loan like we would on a traditional home loan. That is a phenomenal product for someone to use if they've experienced any changes over this period. It allows you to take advantage of refinancing without having to go through the traditional the whole appraisal and so on. You don't even need an appraisal on that product. So great tool to use.
Is that product FHA has available to someone who may have been behind prior to COVID?
No, if you were behind, then it was reported on your credit bureau as being a 30-day late or 60-day late or however that was. You would have to be current in order to qualify for that streamlined refinance.
Okay. One of the questions going back to reverse mortgages that we often see is that they also are concerned about what happens to my property when I pass away, because they often care about what's left for family members. And I think there's another misconception that sometimes it automatically goes to the reverse mortgage company when the senior passes away and there's no options for the family.
That's a good question. It actually does get asked quite a bit. So the thing to keep in mind when you're thinking about a reverse mortgage is that it is really no different than a traditional mortgage that most people have today, with the exception of you're not required to make that monthly payment. It does allow you not to do that. So it also works very similarly when you pass away. So and I'll give you a comparison. The best way to look at this is to look at a regular home mortgage. If you have a regular home loan and you pass away, your home will go to your heirs, whoever you've selected in your will or trust or however your estate planning has been established. A reverse mortgage is no different. So when you pass away, you can select and choose who you want your home to go to. That is really a misconception, because there is no circumstance in which the home goes back to the bank or to the government unless you really have no heirs or unless you turn the keys over to the bank voluntarily. And that's one of the items that I would encourage people to get more information about, because it really does not work that way. You do get to give that to your heirs, the equity that's left that you haven't used.
Okay. Another thing we see often is right now and before this, people fall behind with their condo association maintenance payments, homeowners association maintenance payments. Maybe there's a claim of lien recorded, maybe they're in foreclosure with that issue. Does that, what happens when someone tries to refinance or get a loan modification and they have an issue, a delinquency with their homeowners association or condominium association?
So if you're trying to refinance, that is something that needs to be resolved prior. It is not something that typically would appear on your credit report, but if it is in a legal status, it would come up on some of the searches and items, and it would definitely disqualify you from being eligible for a refinance type of transaction. So it's something you would want to get taken care of prior to trying to refinance your home loan. As far as a modification is concerned, That's a little bit outside of my scope, but the key to a modification is that you do have to show that whatever problem existed that created your financial hardship and caused you to go into default has been resolved, that you can afford to pay for this new modified version of your loan, changing the terms and so on. So, and that's the key. So if you do have a hardship and it continues to exist, a modification typically would not be possible. You do have to show that you're able to pay for the new terms.
Right now, in your experience of what you're seeing, what are people doing? Are they looking, is the market more in the are people looking to refinance more, or have you seen an increase in trying to refinance?
I've actually been very surprised because with the interest rates the way they are right now, I really believe that the market would be 100% refinance business at this time. And the purchase business has increased tremendously. The market is moving very, very quickly. I'm sure we'll confirm that in just a little bit. But I do think that sales are moving very, very fast. Inventory is not staying on the market, and I'm actually seeing a very big influx of purchases. I will caution everyone, though, one thing to keep in mind is when you're in a market like this and the interest rates are so low, there is an overwhelming number of people that are refinancing their home loans. And when that happens, most of the servicing companies, most of the underwriting is backed up. So companies are working to capacity. And so you do, in some cases, we are experiencing some delays, not with all of the lenders that we're working with, but a lot of them are experiencing backups and delays. So give yourself a little bit of breathing room on your purchase contracts. It's always wise to do that.
What are some tips you could give someone who's thinking about refinancing? What are some things they should look at or get a list together of if they're looking to see if they can qualify for a better interest rate or refinance?
So the first thing I would do is look for a company that's local. I have a hard time believing that in today's day and age that people would go and work with a company that is a 1-800 number from across the country. It's my belief that you should be working with a company where you can actually walk into the office. They're going to be there in 5 years and 10 years. A lot of the clients that we work with are clients that we've continued to work with through generations. We deal with families that we worked with 20 years ago, and I'm working with their kids and their cousins and their family. So I really do believe you should pick a company that is local. They know your market, they understand your market. And if you ever have a question or problem, you can walk into their office and talk to someone. Now, when you're looking at a refinance, do not be glamored by the new interest rates. There is more to a refinance than changing your interest rate. So what I would look at, however, is what are the hard costs to refinancing. A lot of times you'll see advertising telling you that there's no closing costs and so on. That is not true. There is always closing costs associated to any type of a refinance transaction. Just because it's not a closing cost associated with the lender doesn't mean that there are no costs associated with doing that business. And I'll give you a perfect example. VA has a great product where you can refinance a prior VA loan without an appraisal, and it's a very streamlined process, kind of like the FHA Streamline we talked about earlier. And one of the requirements of that program is that any costs incurred have to be saved within the first 3-year period. So you have to be able to save more than what it costed you to refinance that loan within that 3 years. And that's a pretty good rule of thumb. And you do need to consider how long you're going to be staying in the property. You also want to take a look at your options in terms of, do you want to shorten your term perhaps, go from a 30-year fixed rate to a 15-year product, or perhaps you need to take a little bit of cash out to pay off some of the credit cards and stop paying higher interest on items that you are currently paying for. So there's a number of ways to do that. When you sit down with your mortgage broker, these are items that you should be looking at and discussing with them to see what the best option financially for you is. You got to look outside of the scope of just refinancing your home loan. There's a lot of different ways that they can be done, and many of them are much more beneficial than really just looking at a flat interest rate.
Sometimes, because you mentioned California,
yes,
a lot of times we see, unfortunately, clients contacting us, and it appears they may have been part of a scam. Have you seen that going on in the real estate realm, or what's your experience with that, if any?
Well, what type of a scam?
Well, we do have the loan modification scams where they're, send us money
Yeah.
and we'll get you a loan modification,
Yes.
which there's free HUD counseling, so that someone shouldn't have to pay upfront for a loan modification or at all if they use a HUD counselor for a loan
Right.
modification.
And to my knowledge, it's absolutely illegal to ask for any fees for any type of modification services unless you're an attorney. You do have to, you can only get paid for those types of services after the borrower has benefited from your services. Again, attorneys are excluded from that, but you should never be working with someone that asks you for fees up front. And that's my opinion, but mortgage companies as well, they do have the ability to ask for an application fee or something of that nature. I would stay away from that. There is simply way too many companies out there, great companies out there that will help you out without charging you fees up front. That is definitely not something that you should pursue. The minute they ask you for money, I would move on and talk to someone else that's a better place to help you.
Okay. Since this pandemic has started, what in your experience, in your line of work, what's the lender's perspective through all this? Do you see them being more reasonable, or have they been more stringent?
They've definitely been more stringent. So especially at the beginning of this, there were some what we call overlays, which are basically additional requirements you have to meet to qualify for some of the loan products. They have slowly been easing back on those additional overlays and requirements. I think some of the heaviest overlays are related to self-employed borrowers. They are getting scrutinized much more closely than someone who's on W-2, for instance. But the overlays are very reasonable, nothing to be afraid of. And you need to always look at this as if you were lending someone some money. What would be a reasonable request to really think about and question whether your ability to repay is still possible, or has it been, affected by COVID? So, and that's what the underwriters are looking for. They just want to know that you're going to be able to afford your new loan and make sure that it's a healthy choice financially for you.
Okay. And what have you seen in terms of people who are trying to who purchase properties right now? Is buying up right now? Are people trying to purchase and get mortgages, first-time mortgages, or a purchase money mortgage? Is there any differences now than before COVID with that?
Absolutely. At the beginning of this period, there was probably 1 month where everybody was a bit still in shock about COVID, and there was a drop in sales in real estate, and then it went back to a really fast moving market, and it did improve significantly. In fact, sales increased quite a bit, and we are right now seeing a shortage in inventory. I've also started seeing some pricing wars on purchase transactions, which is never really a great situation, but we are seeing that shortage of inventory and things moving quite quickly.
Okay.
I wanted to ask you, Gino, you're doing a great job. Thank you so much for being here again.
Thank you.
What do you see in the future, the next several months and next year, as far as the lending institution? Do you think?
So I do think that lending will slowly lax a little bit. It will relax a little bit from where it is right now. The overlays are slowly disappearing. I do not believe we're going to see any massive increases short term for the interest rates. The interest rates are phenomenal, and I hope they can stay this low for as long as possible. And I hope that the folks that are on the fence about refinancing do the research, they look for it, and they take advantage of it while it is here and it is available, because it won't stay there. It will change. This market changes all the time. On our end, we work on the wholesale side of things, and I will tell you, interest rates sometimes will change 2, 3, 4 times a day for us in our price sheets where we're offering, mortgages to clients. So I think as far as changes in the purchase business, inventory will kind of drive that, in my opinion. So I don't know how the effect of some of the renters in the marketplace right now. There is that moratorium on the eviction process for the renters, but that certainly does not protect them from being evicted once that's lifted. And I think that there's quite a few investors that did get hurt in this process, because there's really no recourse for them if their renter doesn't pay. You know, they're out of money. So there may be some influence in the purchase market by properties coming back from investors from that stream. I don't know. That's kind of speculation. My crystal ball has never been really, really great. Otherwise, I'd be much more rich than I am right now. But I do think we'll see some influx of properties because of something similar to that, and that would definitely help a little bit. Once that happens, and you would probably know better than I do right now, but I would expect with the courts, the way they're backed up right now, I would probably expect that those evictions might not even take place until beginning of next year. Would you think that's correct?
Yeah, we're seeing a few, but not really a lot. We're not overwhelmed, but we know that there's going to be a tsunami of like, yeah, it's coming.
It just keeps building. So we're monitoring it, but it's definitely building, unfortunately.
I'm going to be looking at that very, very closely in the next couple of months, because I do think that will change a little bit of what we're seeing right now.
Yeah, and we know last time with the last recession, we knew it came in stages. So we got a few cases here and there, you know, the clients who had the predatory lending loans, so they went through first. And then after that, that was followed by those who had fixed rate mortgages and had lost their jobs and couldn't work. Yeah. This is just like millions of people are affected by it. So it's just going to come at us all at once.
Yes. Yeah, absolutely.
Yeah. You spoke earlier about investment properties and tenants. Are you seeing a lot of like landlords, those who have investment properties, trying to seek assistance because their tenants are not able to pay their rent? Are they seeking?
Surprisingly, not yet. I do have a number of clients that are strictly investors, and I have been questioning them to see what they're seeing. Are they experiencing a lot of tenants that are not paying and so on? And for the most part, they are not. I do work with a law office that does a lot of evictions for those types of investors, and they definitely have seen an increase. But what they have told me is that in most cases, they are working out some scenario to try to help and keep that tenant in the building, or the unit. The other thing that I completely lost my train of thought. I'll bring it back, but we definitely, I haven't seen it increase to the levels. Oh, that was it that I was expecting. The other thing is Broward has a rental assistance program that was just launched last week. So, if you are a renter and you are in Broward, definitely look into that, because there is some assistance available to you. You do have to qualify, but I would definitely take advantage of it while the money's there, because it really will not last long.
Yeah, it's great. Glad you mentioned that, because we did share it on our Coast to Coast Legal Aid page. It's about $25 million that's currently available, and we're sharing the news with the community to let them know that these funds are available for them to apply if they need assistance.
It sounds like a lot, but it goes really quickly.
It does.
Yeah.
We've learned that. We've learned that. And also people can check with their local cities or towns. Some have gotten small amounts of relief for not just tenants, but for borrowers.
Yes.
Sometimes it's harder for borrowers because the buildup is too high. But if you're maybe just a month or two behind, seek out those resources. Locally, there may be some financial assistance, but like you said, Gino, the money comes in and then it gets distributed and it's quickly gone.
Yeah, they definitely do not have the same advantages that a homeowner would. The homeowners, with the forbearance and deferral, they have a lot more assistance that is much more of a long-term solution available to them. So that's a big benefit of owning a home. Yes. Good reason to buy one too.
Yes, thank you for that advice. Now we're gonna bring in Vincent so we can continue the conversation and talk more about the housing market. Vincent?
Yes. Good afternoon.
Good afternoon. Thank you again for joining us. So we want to get from you your perspective as to the current housing market. What does it look like right now?
Ladies and gentlemen, my name is Benson Paul. I'm a licensed real estate agent brokered by Caldwell Banker Realty. Any information I provide today, it does not represent my brokerage or the Miami Association of Realtors, and this is just for information only.
Thank you for that disclaimer.
That's no problem. As of right now, Florida, Texas, when it comes to real estate sales, is on fire. We've seen an influx of people from the north escaping New York and coming down here to buy. To give you perspective on numbers wise, we use a system called the multiple listing service, which is MLS for short. Last year, July to this past July, we had a 24% increase in Miami-Dade in the number of home sales, which brought it to basically around 1,692. For Broward, we had a 24.4% increase from July to July on sales, which brought that to 2,093. A big jump of 24%. Part of it is from New York, entire northern areas.
When they were running to escape the coronavirus at that time and moving to Florida, but now we're the epicenter.
Yeah, yes. I try to not say coronavirus, keep it positive, but
that's good to know. We were talking to Gino earlier. So you tell us, is this a good time for someone to purchase a new home?
When it comes to buying a home, period, you should take your time and analyze your situation. You should analyze your situation. You should talk to a professional. So you should talk to a realtor, you should talk to a lender, and you should sit down with family or whoever you're buying with and look at your finances and make a decision based on that. Based on the information you receive from everybody, you put it together, that's when you make a decision. If you make a decision because the market is hot to go buy, you're not guaranteed to get everything that you're looking for. So it's better, in my opinion, it's better to buy when you're ready. So if you're ready to buy a home, I think you should buy a home.
And what are the qualifications? Is someone saying, okay, I want to buy a home? What are some of the things that they need to have in place or have done ahead of time to be eligible to buy a new home?
I think before they even get to make a decision about a home, they should have a great credit score, because that's very important. Besides a great credit score, I think they should make sure their work history is great, that they currently have a job. I think those are the most important factors. And also, make sure you file your tax returns, because that's important, especially for the last 2 or 3 years. Make sure they file a tax return.
Why is that important?
Those are items that finance companies review. They want to make sure that you're a solid candidate to get a mortgage to buy a home.
What about right now? Oh, go ahead.
So Gino, do you agree?
Oh, 100%. I was shaking my head because it's sad, but we see a lot of people that have not filed their tax returns. The reality is that for most loans that we do, we only use a W-2 statement, and we don't actually need to look at the tax returns, but they have to have been filed. You can't have someone that hasn't filed in 5 years. So, and we do see that. But in terms of preparing for purchasing a home, you do want to have some money set aside. That's important. A lot of times, people don't really know what the costs are on a first purchase. And items like you have to purchase your homeowner's insurance for the first year, and you buy that, while you're purchasing your home. That's a upfront cost. There's taxes with the county. You have some settlement fees and appraisal, and so there are a number of things. And then you do have to establish an escrow account. So having some assets available for that purchase is probably one of the most important things. Benson is 100% correct. You do have to have, your credit has to be decent. There are programs for people with lower credit scores, but they usually come with higher interest rates. So in general, you want to have at least a 640 or more to be eligible for most programs. And then, the higher your score is, then the better your interest rates will become, of course, over time. But Benson is 100% correct. Do your homework, get well prepared, have your documents ready, and go see a mortgage professional to get pre-qualified so that Benson can do his job correctly. The most important thing to identify is how much you qualify for, right? A lot of people go out and shop for a home that is way outside of the scope that they are qualified for. So find out what it is, find out what is reasonable for you, and then look for that priced home. And I think make Benson's job a whole lot easier.
But that goes back to what I was mentioning. It's always better to speak to a professional, get all the information you need, and you make a decision at home based on what was given to you.
Okay, so don't count, just don't focus on the market. Like if they're scared, I may or may not have a job later on. I don't know if I should take on this big responsibility.
Because your home is waiting for you. If you don't take advantage of the opportunity, then the home is gone.
Yeah.
That's good to know.
Can I mention one thing too, Katiana, and you guys have been doing this for long enough, when you are a renter, how much recourse do you really have when something goes wrong? Someone gets sick, you lose a job. What happens to you? You get evicted. When you own a home, you have a resource you can tap into for a number of items.
Mm-hmm. Yeah, that's true. And what are the current interest rates right now? Benson, sorry, I went blank for a moment.
And when it comes to interest rate, it will vary from institution to institution. This goes back to what we mentioned in last. You have to be well prepared. Your history, your financial history, the assets you have, the current job you have, and how much you're making, it's going to affect the interest rate you have. So different institutions will have different products. So it's good to get with a great mortgage broker or a lender to see what interest rate you can qualify for.
Yeah.
And are people that are, I know you guys said earlier, there's a lot of people that are purchasing home. How is this being done now with COVID-19? Are these like virtual tours, or are people actually going into homes and looking at those properties right now?
It's actually a combination of both. Normally you'll have a listing agent, they'll put a link for a video tour of the home. Based on the video tour, your client can decide if they want to go in and go see the home, or prefer to pass just based on the video that's provided and the information that's provided on the property. But now when you do go see the property, you have gloves and you have a mask on to access the property. Normally the owner is not home, or if the owner is home, the owner will step out to allow you to walk in. And in some extreme cases, some owners have little small booties for you to put on your shoes, so you don't bring nothing into the house. But everything is done within safety. Each brokerage have standards they set, so when you're accessing properties and you're showing properties.
That's good to know that you guys are staying safe out there. So right now, just anything else that you guys would like our audience to know? Like I know the whole topic is what lenders don't want you to know. So Gino, do you want to go first to add anything else that we may have forgot to mention today?
Sure, there's a number of things to watch out for. So the first thing I would encourage everyone to do is, before you start making any decisions, if you are in a home loan and you've experienced some income loss, you do want to find out what the rules are before you make a deal with your mortgage company or your servicing company. The CARES Act spells out very specifically that you can request up to 180 days of forbearance, and you can request that 2 times. In other words, you can get a year. Now, I don't encourage everyone to do that if they don't need that service, but what I am seeing is many of the banks are sending out a response to the people requesting these, asking them to go into a modification or asking them to make payments after 3 months. And I would encourage you to be very cautious about what you sign. Talk to someone who knows a little bit more about that before you agree to doing something like that and waiving what the CARES Act has provided for you. I know that Sarah's going to talk a little bit later about something that the CFPB has published on their website, and we'll share that with everyone on here. But it's a great resource that you can look at depending on what type of home loan you're in to see what options are available for you, with related to that. So I encourage you to look at that for sure. And that's really, I don't have anything else really, as we come across anything during the rest of the conversation, but that's one thing we haven't discussed yet.
Great. Benson, you have anything else you would like to add?
Yeah, actually, I would. This has to do with safety. I know because of the great interest rate, we are in a hot market. Everyone's either looking for a great home or they're looking for a great place to rent. Do not be in a desperate position to take advantage of either, because there is fraud. I read an article from May where somebody went on Craigslist to try to get a rental, and the person promised them keys, but once they transfer the money over and they try to go get the keys, there was nothing present. So I recommend you. This is the benefits of working with a realtor, but make sure you can call the place or go to the place to actually rent, or talk to someone about renting, about the rental rates and everything. If there's no brick and mortar, or you can't prove that person, do not take advantage of it. And even when it comes to buying a home, just because you see the home in one place, you don't see it in another place. Do not be eager to purchase the home. Take care of yourself first. Verify that who's the owner by looking up on Broward County Appraiser. If anything, contact a realtor. Ask them to check the information on the property for you. I don't want anyone losing any of their finances that they took time to save to purchase the home, all on one home that's really not on the market. The buying process is a process. You can't rush it. You can't change it. It's been there. Now, will it get more efficient? Yes, it will get. But please have patience, but be efficient in how you buy your home. Use your time efficiently, I meant.
That's a great point, because we see it a lot of times. Sarah and I at our office, we see it, the clients come in and then we're trying to get title back to a home, or they're a victim of a fraud because someone listed a property on Craigslist and told them to wire funds. And then they'll get keys, and then they want to know, okay, I'm not getting this house. I went to look for the address, but it's not there. Sometimes a lot of those victims are seniors, but that is a great point that people do need to be careful, because there is fraud out there. Or someone might purchase a property without doing a title search. So they get it subject to all these liens that are on there. And then they want to know, well, am I responsible for these liens that are on the property? I want to sell it, or I want to refinance, but there's pending liens on the property. So that is a great point for them to do their research and to be careful. Thank you for that. Sarah, you have anything else you would like to add?
No, just that as Gino mentioned, the CFPB, www.consumerfinance.gov has a lot of great resources. If you are a borrower, you can see, depending on what type of mortgage you have, FHA, Fannie Mae, VA, it's kind of a one-stop shop to get information about your options. Also, if you have a problem with your servicer, it has a place where you can submit a complaint that they can review to see what's going on. So it's a great resource to look at if you are having an issue with your mortgage, to see what options you have.
And don't wait till the last minute. A lot of times we see people, they wait until a foreclosure is filed. Right now there's a moratorium in place, but we don't like to see when people wait last minute. Once a foreclosure is filed, then they're trying to seek assistance with the mortgage option. So that's why we wanted to come on today to share all this information with you. Thank you, Gino, and thank you, Benson. All this helpful information that you do have options, and you should contact your mortgage servicer to see what those options are. And so you can take advantage of them right now in the market to try to save your home.
Absolutely.
So,
the other thing you haven't talked about is the CARES Act does provide the option to take money out of your 401k right now. You can take up to $100,000 without the penalties that are usually associated with taking that money out prior to turning 59 and a half. So that's also another resource that can be used either to purchase a home or to help you, as an alternative to forbearance or other options. And then there is one thing I do want to point out, and this would be helpful for Benson too, but when you are looking for a home, one thing that you want to avoid is, if you're a couple, do not put your names on every credit item. For example, if you have a credit card, do not both be responsible for that credit card. Use one person for one credit item, whether it's a car, whether it's a credit card or anything, so that you're not both tied to the debt. It really helps. And there's a lot of situations where I don't need both borrowers to purchase a home or to refinance. I can do it with only one person. And that's the smartest way to do it, because if something happens to one of you, at least not both of your credit is destroyed because you lost a job or you had an accident and you ended up in the hospital or something like that. And then just forecasting and looking forward, what you do want to try to do is not use more than 30% of the limit on your credit cards or any lines of credit that you have. It really helps your credit scores increase. So a great thing to do and is, if you have a limit on a credit card for $1,000 and you typically will spend $700-800 on that card every month and then pay it off, that's a great behavioral pattern. But you want to make more than one payment. Get to 300, pay it off, and then when you get to the next 300, pay it off again, and you'll see your score shoot up. It will save you tons of money on your interest rate on that mortgage moving forward.
It's very helpful information. Thank you so much, for that. I did not know the part about being able to take money out from your 401k to buy a new home right now and not be subject to the penalties. Thank you for that information.
You're welcome.
Thank you, everyone. Anything else? Anyone else? Okay, great. So we're gonna bring on Alicia.
Right. Wow, that was so much great information. I was taking notes myself. I'm just going to put that out there. So thank you both. Special thank you to Katiana and Sarah for organizing this clinic this evening. And thank you to Benson and Gino for giving your time after hours to come and provide this information to the community. It is much appreciated. So thank you again for that. And for everyone who watched, thank you for checking it out. And you can go back and watch it live on the live feed. Will show up in our videos on Facebook. We'll also load it to our YouTube page, and both are at Coast to Coast Legal Aid. So thank you everyone who watched tonight, and thank you all for having this clinic.